Hello and welcome to this week's edition of Invest Africa, right here on CNBC Africa. I'm Alicia Seckham. Well, the resource boom is one of the main factors driving continued investor interest on the continent. According to a study by tax and advisory firm KPMG, oil reserves in Africa have grown by 120% and gas reserves by 140%, and that over the last 30 years. Philani Nyalunga filed this report.
The oil and gas industry has played a vital role in widening the investor sentiment of Africa as the next investment frontier. According to the World Bank, the new discoveries of oil and gas have become one of the key contributors to the continent's economic growth.
Africa is increasingly becoming energy independent and an energy exporter. And that in itself is shifting the dynamics of the different economies in Africa. And so you're seeing different countries on the east coast, for instance Mozambique and Uganda, also starting to benefit from higher energy prices.
According to a report by the World Bank, Africa has changed, moving from economic stagnation to above 5% GDP growth on average. The report further states that foreign direct investment inflows to sub-Saharan Africa are projected to increase to record levels each year over the next 3 years, reaching $54 billion by 2015. Nigeria has long attracted investor interest in the sector, but new discoveries in East Africa have also fueled investor appetite. According to Sanusi Lamido Sanusi, Central Bank Governor for Nigeria, changes need to be made if Nigeria is to continue keeping ahead of the pack.
The economy remains highly vulnerable to external shocks, especially around oil price. Oil continues to account for 96 to 97% of our export earnings, and about 80 to 90% of the capital flows into Nigeria basically are portfolio flows. So until we are able to go ahead with the power reforms, with petroleum industry reforms, with agricultural reforms, with other structural reforms, we're not going to get the foreign direct investment that we require.
Refining capacity remains a problem for Africa, with many countries forced to export crude and then re-import refined oil. Philani Nyalunga, CNBC Africa, Johannesburg.
Well, at the moment, Nigeria and Angola, together with some of the lesser oil and gas producers on the African continent, account for about 7% of world oil production. But the potential, if you're looking at production in the deep waters of the Gulf of Guinea, East Africa's emergence as a crude producer, and the natural gas discoveries off the coast of Tanzania and Mozambique, is huge and has the further potential to change the game completely. To take a closer look at this evolving space and to get into conversation, we're joined by Paul Eardley-Taylor, Oil and Gas Southern Africa at Standard Bank, Norman Ndaba, who's Director of Energy, Chemicals and Utilities at Ernest Young, Rajen Reddy, who's CEO at KZN Oils, and joining us from our bureau in Lagos, Nigeria as well is Pade Durotoya, who's the CEO at Oando Energy Resources and Exploration Production. Gentlemen, thank you all for joining me today. And Norman, let's perhaps kick off with you. I mentioned some of the territories that are sitting on the radar screen right at the top there. We're seeing that exploration extend to formerly no-go areas, the likes of Somalia even. Take us through your sense of the shifting landscape we're looking at here.
There's no doubt, Alicia. We've just produced a report again for 2013, which is the Africa Attractiveness survey done throughout the continent to promote investment in Africa. The main conclusion of that report is that perception is one of the reasons Africa is not moving as fast as it should. And the conclusion is those who are already doing business in Africa, together with governments, we should make it easier to do business in Africa. Mm-hmm. Right. Now, if you then look at the oil and gas landscape in itself, new players are coming into the fore, as you said, to support, if you like, Nigeria and Angola, and now Ghana. And Tanzania is on the rise. And of course, the Gulf deep sea drilling is going to make a big difference. It's going to be a game changer in the next 10 to 20 years in Africa.
Absolutely. Paul, let's get your take on the investment potential that's actually being put on the table here in the face of the realities that we've just unpacked, but the perceptions that stand as well.
Yeah, sure. It's probably best to just sort of focus on a case study before broadening out for the point. One of the best examples globally of a successful upstream energy investment in the last few years is Mozambique. You've had a series of enormous finds made by Anadarko and ENI. Potentially there's 180 TCF of gas in place, which is more than the North Sea, but that's just the start of the process. The scale of the numbers and investment requirement is something that will really be tackled over the next year or so. So you have to date probably had $1 to $2 billion invested in upstream, but to monetize the gas and then to make Mozambique a fast-growing economy for the next 20 years or so is going to take a lot more. Probably the first project, a liquefied natural gas project, will cost in the region of $20 billion, and if successfully executed over the next year, will take the country forward. And Mozambique is one example, but really if you multiply it by all the countries that have been mentioned, we're talking in the order of $60 to $100 billion across Africa in the near future.
The operative words there being if successfully executed. Rajen, let's bring you into the conversation here because you're a player in the industry. Give us your perspective on the industry right now and how South Africa in particular fits into this equation where we're faced with a burgeoning oil and gas space in Africa, bearing in mind that we've got the upstream and downstream sectors to consider.
I think it is very pivotal that, Africa gets its act together, because apart from it being a very strategic commodity, but I think for the prosperity of Africa, it will be very key and vital that we manage these resources very well. I think if you've seen other countries in the world how they have exploited the crude oil, and they've made tremendous inroads into improving their country, which we admire at a distance, and yet most of those wealth have been gotten out of Africa. So that's why I'll put it that the governments of Africa really need to come to the fore now and also take advantage. But also what has happened, we didn't play a very strategic role in the extraction of crude. We always felt, we were the deckhands, as we would put it, in the lower in the value chain. So now when we are discovering this, not that we, and it just shows how poor we are in actually unveiling and unearthing this resources that we have, which was known by the other countries many, many years ago. And so while the price is at its, quite a high level, and I'm sure that if we use the income sparingly, I think we can also make our cost per unit in whatever we're producing, whatever we're manufacturing. I think that will lead to the prosperity and also poverty alleviation in the whole of Africa.
In the whole of Africa. As Rajen has said, Padia, we're admiring what other African countries are doing from a distance at this stage of the game. Nigeria is one of the biggest players within this space. Talk us through the FDI coming into the upstream sector specifically and how local players like yourselves are positioning with all the foreign attention that the sector is currently getting.
The most important thing to realize is over the years, local participation has been on the increase. The Nigerian government in particular has been pushing very strongly to see through legislation to see increased participation of indigenous companies. Our company, Oando, has led the blaze in this increased participation. And the way to do it, the way we've done it, is to create a company that is investable, so focusing on the structure, on processes and governance, on creating a valuable company that is attractive to international investment. And this is what other companies, indigenous companies, have been doing to be able to take advantage of the opportunity that is being created by the changing landscape driven by changing legislation.
How hard is this to do for companies operating in Nigeria, in South Africa as well? I picked up a quote from Rajen in an article that he was quoted in a while ago, where he said that the oil industry is a closed one, something of an old boys club. It's hard to break into. It's very exclusive.
I think it's a subject that needs stakeholder focus over a long period of time. If you look at some of the most successful countries for developing indigenous resources and companies, Norway is the example everyone bands about. That process started in the 1970s. But if you look at more emerging market players that have started doing the same thing, Brazil is probably the classic example, and their legislation dates from around 2003 and has been pretty much signed by every single international company in bidding for Brazilian pre-salt. So I think the answer is it is doable for the various African jurisdictions who are now finding hydrocarbons for the first time, but the most important thing is to get the timelines worked out, what each role actors must play, and then develop a plan and stick to it.
And legislation that is supportive as well. So Rajen, let's just highlight the introduction of BEE legislation in South Africa, and how you managed to leverage off that when venturing into this space.
I think one must give full credibility to our government's policies. In the old days of BEE, well, now it's BBBEE. And I think that's what has given rise to companies like KZN Oils to get into the stake. But, you sort of do the easier things first, and where you buy and sell, and then you slowly manufacture. And then, as government, and I think our Minister Ndaba Peters is also doing another brilliant piece of work, where legislation is encouraging that what we call HDSAs, historically disadvantaged South Africans, are starting to give an opportunity to trade with crude, and they forcing the major oil companies to actually part of a percentage of their procurement in crude to actually go to companies like ourselves. So we're also gearing ourselves to do that. And I'm not saying this because Standard Bank is here, but I think Standard Bank is one of the leaders in funding these opportunities. They've always been very, very proactive in trade, and the access to finance, to support these transactions is absolutely major.
Norman, what's your assessment of the stride we're making from a regulatory and a policy side of things, but also from a funding perspective in support of players in this industry?
Other things. If I can start with the financing side of the challenge for Africa as a whole. If you look at the oil and gas industry, there's the upstream, the downstream, and the oil field services. And if you look at funding across that value chain, upstream is very, very difficult, and therefore debt funding for upstream, that is drilling and exploring, is less of an issue. Equity funding, and the equity is in billions and billions of dollars, and unfortunately at the moment the people with that kind of money are the majors. And then you come downstream where Rajen and KZN Oils are. It's easier to have a funding model where you use debt and use equity, and it becomes easier to fund. On the oil field services, the services to the oil industry, it's actually even more easier to fund. So that's the big challenge we have. And to the extent then that government comes into play, now again, like taking Africa into context, we need to unleash our own resources by making sure that legislation and the framework to enable business to be done. How to start to make sure that business can be started in 6 days rather than 6 months.
Absolutely. Ease of doing business,
ease of
in
doing
focus.
Business, all those things, yes.
Paddy, over in Nigeria, I mean, when it comes to potential there, I've been reading that Nigeria could add up to 12 new offshore fields with at least 1 billion barrels each in reserves if it can get the long-delayed petroleum industries bill into law and reach a deal with majors on the fiscal terms for the deep offshore investments they're making. I mean, when it comes to regulatory challenges and the kind of shifts we're seeing in that regard in Nigeria, take us through it.
Well, the petroleum industry bill is a very ambitious program that the government of Nigeria has been on for a while now. And the purpose of it is really to simplify the regulatory framework that currently exists and drives the industry. We have, the last time I counted, well over 16 different types of policies and laws that govern the industry, and not as much transparency as we'd like, and a very, I'd say, big role that the NNPC plays as a government business and as a regulator and as a representative of government in the industry. So what the PIB was supposed to do is to simplify all of this and also look at some of the laws that we've had and some of the fiscal structures we've had that are beginning to look outdated. The concern has always been that there would be increased government take, so there's been this negotiation, and the challenge is we're now in this lacuna, this gap where nobody knows exactly what's going to happen. Is it going to be retroactive? Is it going to go up or go down? And as such, all the IOCs have kind of like held off on major investment decisions. What we know is we're closer to the end than we are to the beginning as an industry. And we are beginning to see signs that the government is actively listening to the concerns of everybody, not just the IOCs, but also indigenous players like ourselves. And one thing we know for a fact is the Nigerian government recognizes the importance and the role that international oil companies play because of the size of the balance sheet that they bring to some of these deep water projects that are very difficult for small companies to do, and that this represents the future of Nigeria growth of production.